Hello guys, welcome. I hope you guys had a great weekend. In this video I'll be explaining to you the new updated ORB model of mine. It is the continuation and the reversal model. These updates are made based on what I learned throughout this year forward testing, right? So now we're coming end of this year. Happy New Year everyone. We're almost mid-December, so I'm gonna just I just finalized everything. I've learned from all of the losses that I had, all of the winners, the days that I skipped, everything, right? So what I usually do, I just whenever I finish 1 month of forward testing, I back test it again to see if I missed anything or I did FOMO or whatever. So I journal. Journaling is very important. It will reflect on what you're doing, right? So that will be it. Now I'll be explaining the strategy in details, and then we're gonna hop into the backtesting. So enjoy the video. So what is the updated thingy that I did? So I'm gonna go to chart here. So it's gonna be the same thing. We wait for the 15-minute candle to form the 9:30 15-minute candle. I'm gonna mark the high and the low of the candle for both NQ and ES. Okay, NQ and ES. So let me do something like this. All right. So at 10, our window to enter a trade is 10:01 until 11. So actually 10:59. So that's our window. If at 10:59 you found actually I'm gonna make it 10:58 because 10:59 you just don't enter a trade. It just actually 10:50 is just close the chart, but sometimes you would find a very good volume here, and then the trade could play out. Actually, I've seen a lot of my trades that I enter at 10:58, it works out very well, but this is very rare. But to be safe, just stop at 10:50. Why? Because at 11 a.m. is the new hourly candle, so it will have a very random volatility. It might go against your favor, so I think that's a sweet spot. But for the back testing, just go with this. Once you see it's 11 a.m., just stop looking for entry, go for the next day. Anyways, so we long above the range, right? We do not trade inside the range. So if you're above the range, we look for an IFVG and then we enter long. Below the range, we look for the IFVG and we enter shorts. We do not trade inside the range whatsoever. Okay, same as the first strategy that I showed you. But what does ES has to do with this? Well, if you want to go long, we have to be above the range, but we also want to see ES above the range. So that means if NQ, I have an IVG to go long, ES has to be above the range, so I want them to be correlated. So correlation means in this instance, what I mean by correlation in this instance is that I want to see NQ and ES above the orb for me to enter long on NQ. Okay, so let's say I have an entry right there, IFVG, but ES is inside the range, then that entry is not valid. I'm not gonna enter that trade because maybe ES is going to pull NQ down, and therefore I might be cooked. This is a higher win rate than the old one the old strategy that I told you without the correlation with ES. Yes, you might have skip a winner, right? But that's I've backtested. I have a lot of data on this, and you could just also forward testing it. Just tape read it throughout the year, and you'll see actually, it doesn't happen often. It's just a safety layer for you. Always protect your capital. So for you to go long, you wanna have an NQ and ES to be above the range, and ES for shorts, ES and NQ should be below the range. Okay, that is for the continuation model, right? That's the updated for the continuation model. Now for the reversal, what do? The entry, for us to go with the continuation, what is the rules? We need the price to either like break up and then invert. Wait, hold up, let me just draw a fake IVG. So for us to enter a long, we need the price to close above the range and invert the fair value gap. That's where we go long. All right. If the price failed to do so, then our long is going to be, we're going to wait for the price to retest the orb and then go for a long if we invert the fair value gap, or just break below and then break back above again. But we need to put into consideration ES has to be above the range. Okay, so longs, we either break out of the range and then we invert the fair value gap, we go for longs, or if the price break above the range but there is no inversion, so we're going to be waiting for a retest into the orb or a break down below and then break back above and then invert the fair value gap, then you go for the longs, but ES has to be correlated with NQ. All right, that is for the continuation model. Now I'm going to go to the reversal because I like it. That's a very important point I need to mention. Okay, so now we go to the reversal. What is a reversal? So let's say the price. So we agreed that we need to wait for the price to retest the orb for the continuation or break above the orb to go for long, right? Let's say the price, right? The price just keep on going up without no entry. The price did not retest, did not break below and break up back above. So in this case, what do we do? When do we enter shorts? Okay, which is a reversal. We need to have an SMT with ES. So in this case, we do not care about the correlation whether ES is above the range or below the range because we are looking for a reversal, right? We're looking for a reversal. So we need to have an SMT, right? What is an SMT? Well, an SMT, I'm going to link a video in the description where there's a full video me explaining the SMT from start to finish. So if you guys don't know what SMT is, I suggest you pause this video, go watch the video that I explained the SMT for, and then come back again. All right. So SMT in short is that two correlated pairs, right? One pair sweeps a high, the other pair fails to sweep a high, and that is an SMT. It's a sign for a reversal or a continuation. Okay. So in this case, we only go for reversal if we see an SMT. An SMT has to be very clear, a swing to swing, not between two candles. It has to be swing to swing. What do I mean by swing to swing? An NQ has to have a swing high, ES has to have a swing high, NQ has to have swing high, and ES has to have a lower high. It's like etc. You know what I mean? They both have to be a swing. If you're struggling to if you are forcing to find an SMT, then you're just FOMO. That's not an SMT. SMT is very clear. It's right there, right? That's pretty much it. So when we have an SMT, that's where we look for a short, wait for the price to invert, and that is our reversal. Okay. So for both continuation and reversals, we go for 1-to-1. The risk to reward for this strategy is going to be 1-to-1. I've learned this the hard way. Honestly, 1-to-1 is more than enough. For real. Think of it now. Let's say you have I'm treating this right with a perspective of having more than one accounts, prop firm accounts, right? If you have a personal wallet, then you need to have a higher capital, okay? Like at least $10,000 or more. But using a prop firm, we could abuse the copy trading system using Trader Syncer. You could just copy trade up to 200 accounts, funded accounts, right? So with one trade, let's say you have 10 accounts. With one trade, you're risking $200, right? It's a 1-to-1 trade, right? If you win, you just win $200 times 10. That's it. You have it. Like what's $2,000 with one trade? The beauty of 1-to-1 is that you get in and out. Like like it's almost impossible for you to be chopping for. Well, the trade might be like might take long if the price action is garbage. But generally speaking, using NQ, NQ is very highly volatile pair. You should be fine with 1-to-1, and it has a higher win rate, and it will buy you peace of mind. It helped me personally, to be honest. I'm just looking back at the beginning of the year when I was going for 2R, 3R, 4R. I'm like, man, if I stick to 1R, I would make 10 times more of what I did this year, to be honest. I'm just giving you my personal experience. That's my take. You could just take the strategy, back test it on multiple R. You just get your data. But I'm just telling you, 1-to-1 will have at least 75 to 80% win rate, which is amazing on one trade a day. Okay, that is for the risk management. Now I'm gonna go to charts. I'm gonna just back test January this year, and just show you some price action of how the strategy actually works. Alright guys, so I just want to re-explain the rules. Like, when do we trade? Okay, so we only trade from Tuesday till Friday. So there is no Mondays whatsoever. Mondays are just out of the picture. We do not trade FOMC. And if the president is speaking, whether it's Trump or, well, obviously for the next 4 years it's gonna be Trump. When there's Trump, you avoid trading. When there's FOMC, you avoid trading, and you only trade Tuesday till Friday. And if any of the Feds has to, by the way, all of these has to be red folder. All of these has to be red folder. Okay, except here we do not trade this. If there's red folder, that's it. If Trump is speaking, it's orange folder. It's okay. Whether if it's before this New York session and after the New York session, doesn't matter. When you see this, you just close the chart. You just take a break, okay? The trading windows, as I told you, is from 10:01 till 11 a.m. Okay, that is pretty much it. So that's the rules. One trade a day, and yeah. So yeah, starting off from January, right? Mark the high and the low. That's NQ on the left hand side. We have ES on the right hand side, right? So that's the 15-minute candle. Now we go on the 1 minute. So what are we looking for? We want the price to retest this orb. All right, we have an inversion here. Well, it's 10 a.m. so unfortunately we're not gonna go shorts. We are looking for a trade at 10:01. So in this case, we're gonna be looking for a reversal, or if the reversal has to be with an SMT, of course. If the price did not give us an SMT, then we need the price to go all the way up to retest the orb. Then we look for shorts. Okay. All right. So do we have an SMT? Actually, see, that's a swing. Yep, that's an SMT. Look at my cursor. That's the cross. That is a swing. This swing is this swing right there. So, and that's a swing to swing. NQ created a higher high. ES created a lower low. And we do have an inversion. No inversion. Actually, we do have one here. Alright, so we just inverted this fair value gap. Now, our entry is going to be as follows. Like, focus with me with the risk management. You place a stop order on the top of the candle that closes of the IVG, the wick, right? And you just go for 1-to-1. Listen to me carefully. 0.8 R, you move to break even. So 0.8 R, you move to break even. All right. Always protect your capital. Yeah, maybe it just goes back, but like if it goes that way and then it start reversing, you're cooked. That goes for both continuation and reversal, right? 0.8 R, go to break even. Otherwise, just like obviously we don't take partials. This is just 1-to-1, right? So you go stop order. That's a 50K account, so I'm risking 0.5%. That is my taste. I always like to risk $250, 0.5% of my funded account, right? If it is if it's an eval, then I'm just double the risk, obviously. All right, so now that's a buy stop. All right, we move to break even and TP hit. Okay, now we go next day. Well, that's Monday, so you could actually avoid Mondays here. You go to the custom settings and just days to skip, Mondays. So now Monday won't be showing no more. Tuesday, remember, always keep track of what is this here. What's the news? Okay, nothing. High and low. Okay, break below the range. Oh, I forgot to mark the ES. Okay. So now there is no SMT here. Okay. We break above the range, so now we don't trade inside the range. Now if we go above the range, we look for longs, below the range shorts. If we are too extended from the orb, we will be looking for an SMT and a reversal. So now we do have an IFVG here, but the price did inverted there, so it did not close below the range. Okay, even though ES did. So like, remember the correlation. So for this to be valid, we need this candle to invert this fair value gap, which it did, close below the inversion, and also close below the orb. ES did, NQ did not, so that's not a valid IFVG no more. So our next IFVG is going to be this one here, which is right now. ES close below, NQ close below. That is a valid entry. Stop order there. Your stop is at the last swing. That's continuation, right? Target 1 to 1. 0.8 R move to break even. All right, break even, and we got stop or break even. Look, that's actually crazy. That's just crazy. We just closed at 0.97 R. 0.97 R. You'd be crazy if you don't close that trade like right away. I would definitely close that. But hey, we're just back testing, right? So we got started break even. So once you so here's the rules. Well, that's up to you. Well, that's how I do it, right? For me personally, if I have a trade, if I get a sub break even, I will just give myself one more trade. All right. For you, just do whatever fits your taste. So for this instance, I'll be doing one trade only. All right. So let's see. Actually, that was a break even. There's an SMT here for longs. Oh, there was an SMT, but it already hits our break even, so it was invalid no more. The SMT was this one here, here, and here. So, but we were already in a trade, so just got to stop a break even. It did retest the orb, so I'm looking for shorts, which was here actually. This one, we did retest the orb. And then we inverted fair value gap. Yeah, put a stop order, stop at the recent high. 0.8 R move to break even. Break even, and okay, well, TP, lovely. All right, it's quick scalp. That was that. What's that? 1, 2, 3, 4, 6 minute trade, right? I hope all is clear. If you guys have any questions, please feel free to send in the comment section. I'm gonna do one more day. Actually, that's Wednesday. Okay, there's no FOMC. I'm gonna do one more day, and then that will be it. Okay. High and low, the 930 candle. But because I just showcase a reversal and a continuation and a reversal. Okay. So now, we are above the range. Also put in mind there's one thing here. When we inverted this fair value gap, ES was correlated. So I forgot to pinpoint that thing. So here, that candle that inverted, it's this candle here. So we are in correlation. Don't forget that. Same goes here. Like don't forget this. This is very very important. It will save you a lot, like from losses. Right. So we have an SMT swing to swing. Let's see. That is an SMT. Okay. It got invalidated. Another SMT invalidated. So here we only look for shorts. We do not have an SMT here because that's not swings. We do have here. Do we have actually? So you need to, yeah, SMTs you need to practice, right? You need to practice at this SMT here. No SMT. SMT here. Nope. Ooh. No SMT. No, nothing that day. Well, now it is 10:55. So unfortunately, the price chopped around, went down without us. There's no clear SMT. Since I'll just give it one more day because I wanna execute the trade in front of you guys. Here, high and low, high and low. Okay, now, wait, is there any news? No news. So now, close below the range. We look for longs for SMT, shorts if we retest the orb. We did retest the orb. No inversion though. We have inversion here. That's your stop. 1 to 1. And 0.8 R you move to break even. And you got cooked here. Okay. So that will be pretty much it. It's very, very simple and straightforward. That's a very choppy day though. Very choppy day. Very choppy day. Well, we just can't predict, the choppiness. Usually when the price is stuck inside the range, that's where the price gets to be choppy. And notice all of our trades that I'm taking, they're all correlated with each other. ES is correlated with NQ, right? So if the price inverted here and ES is inside the range, you do not take the trade. All right. So that will be it, guys. If you have any questions, please let me know in the comment section. More than happy to answer all of you. Also, you could join the Discord. I'm more active on Discord, and I'm trying my best to answer everyone, doing my best. I think on Discord I'll be it's just very easier for me to answer all of your guys' questions and concerns. But that will be it so far.